Now, see in the previous class, we have completed creation of company, then company code, and we have assigned a company code to company, right? And Kirti, I will send you the last week only, last Sunday only we have started this batch. So today after the class, I will send you the previous recording. Okay, Kirti. Now today we start with define business area. Step number 1.4, define business area. So first I will explain what is the concept of business area. See, business area means it is an organizational unit in financial accounting that divides the organization based on the area of activity. Area of activity means geographical area of activity or line of activity. Again, I am repeating. It is the organizational unit in financial accounting that divides the organization based on the geographical area of activity or line of activity. So, division of the enterprise based on the geographical area of activity means what? For example, we are carrying on business in Washington, New York, and California. So, this is called geographical division of the business. This is called the geographical division of enterprise. We are carrying on business in Washington, New York, California means what? We are having the branches there. So generally the branches of the organization can be created as business area. And another thing I told you is division of enterprise according to line of activity. What is the meaning of the line of activity? Under the same name, right? We are carrying on business in textiles manufacturing. This is called one line of activity. We are carrying on business in paper manufacturing. This is called another line of activity, and chemicals manufacturing. This is also called another line of activity. So these are called line of activities. So we can design the business areas either on the basis of geographical area of activity or the line of activity. Okay, we design the business areas. What is the purpose of the business areas? The business areas are used to prepare the financial statements according to the business areas for the internal management analysis purpose. Means what? Suppose, for example, you have created your business areas on the basis of geographical area. Means each branch you have created as business area. Then for each business area, you can prepare the profit loss account and balance sheet. So with the help of the profit loss account for each business area, in our example, for each branch, with the help of the profit loss account for each branch, you can find the profit for each branch. Then we can identify if any branch is making any losses. So if you find that if any branch is making losses, then we can take the corrective action to make that branch running into profits. Suppose if the management thinks that it's not at all possible to make the branch running into profits, then it can take a decision. To close that branch so that the profits of the enterprise are maximized. That's how the business area financial statements can be used by the management for internal analysis purpose. Another thing is this business area financial statements can also be used for the decision making purpose. Means what? Suppose, for example, you have designed your business areas on the basis of line of activity. Then this year, the management wants to introduce some additional capital. Then in which line of activity that additional capital has to be used? Right? For that, we have to know the profit from each of the line of activity. So you can introduce the additional capital in the activity which is earning more profits to the company. So for that purpose, we can use this business area financial statements. So that is the purpose of the business area financial statement. Now here the question is, how do we decide whether the business areas are to be created either on the geographical area of activity or the line of activity? I will tell you different scenarios. For example, you are carrying on business in Washington, New York, and California, and these three geographical areas you are carrying on business only in textiles manufacturing. In that case, we create each geographical area as business area. Suppose another scenario is you are carrying on business in three line of activities: textiles manufacturing, paper manufacturing, and chemicals manufacturing. But these three activities you are carrying in only Washington. But generally, this scenario will never exist, right? Because no company will restrict itself to only one geographical area, right? But theoretically, I'm explaining. If that is the case, always we create the business areas on the basis of line of activities. But the real scenario is you are carrying on business in these three activities. Sorry, we are carrying on business in these three geographical areas, and in every geographical area, we are carrying on business in these three activities. This is the real scenario that will exist. So in this case, the management requirement is it wants to know the profit for each geographical area, and it also wants to know the profit for each line of activity. This is the real requirement of the management, right? In that case, how to meet that requirement? Remember, in this particular scenario, always the business areas are created on the basis of geographical area of activity. Means, one second. Can you mute yourself, please? Srinivas, can you mute yourself?
Yes, sir. Sorry, sir.
No problem.
Yes, sir. Problem.
Okay, that's fine. So, means always first the business areas are to be created on the basis of geographical area of activity. Means Washington will be created as one business area, New York will be created as one business area, California will be created as another business area. So when you create these geographical areas as business areas, you can prepare P&L account and balance sheet for each business area. So you can find the profit. Management requirement is met. Now, management, another requirement is it wants to know the profit according to line of activity. In order to meet that requirement, each line of activity will be created as profit center. Profit center is the concept in controlling, right? So in this case, when each line of activity is created as profit center, we can find the profit according to each line of activity. So what is the profit center? How they are configured, we will see in the controlling component. But here what you have to understand is how to meet the requirement of the management here. Okay, I told you for each business area we can prepare profit loss account and balance sheet. In that case, the system has to identify the expenses, revenues, and balance sheet items with each business area. In that case, how the system will be able to identify the expenses, revenues, and balance sheet items in the business area? At the time of posting every expenditure, every revenue, or at the time of posting every business transaction, the user has to enter the business area. So with the help of that business area information, the system will be able to identify the expenses, revenues, and balance sheet items with the respective business areas. And the definition of business area is only optional because it's not legally required to prepare and present the financial statements for the business area. If you remember in the previous class, I told you that if any reporting is legally required, that reporting is mandatory. If any reporting is required according to will and wish of the management, then that reporting is optional. So in any country, there isn't any legal requirement to prepare and present the financial statements according to business areas. But if the management wants to know the profitability for each business area, then only we have to define the business areas. And we can define any number of business areas. Obviously, a company code can carry on business in any number of geographical areas, right? That's why we can create any number of business areas. So this is the concept of business area. And all this explanation I have documented in your notes. I hope everybody has received this basic settings material. And if anybody does not receive, just give me the mail after the class, I will send it again. So this is the concept of business area. Now let us see how to define the business areas. See the path SPRO. It is also starting with SPRO, means it is the job of the consultant. So let us log into system now. SPRO. SPRO is the transaction code for IMG stream. Enterprise structure, definition, financial accounting, define business area. Click on new entries. Look at the screen, everybody. Click on new entries. So here you have to give an identification for each business area, right? And it is 4 characters alphanumeric. So business area is equal to 3699. It's our company code name, right? So I am using our company code. Or you can use any other name. Just for easy remembering purpose, right? For the convenience of easy remembering, I am using our company code name only. Description is equal to Washington branch. Business area is equal to 3699. Description is equal to Washington branch. Suppose if you have the California branch, give some other name 369A, California. Like that, you can go on defining any number of business areas. But in our material, I have given only one business area. Click on Save and enter. Now, see the next step. Main fiscal year variant, right? Under that, step number 2.1, define fiscal year variant. So first we have to understand what is variant. After that, what is fiscal year, right? Please put heading in the notes. Fiscal year variant. Fiscal year variant. Under that, heading is variant. Heading is variant. It is an object. It is an object for which it is an object for which some values are defined. It is an object for which some values are defined. When this object is assigned to the other object, when this object is assigned to the other object, then the values are also applicable to that other object. to that other object. This is called variant principle. This is called variant principle. The variant principle is widely used in SAP. The variant principle is widely used in SAP. So what is this variant principle? You can clearly understand at the end of the topic, right? Ali, we are doing the step number 2.1 in the second page of your material. Step number 2.1 we are doing. As a part of that, I have given you these notes. Anyhow, I will going to send you the recording, no? So no worries. Now, after that.
Okay, that's better. Thank you.
Yeah. After that, put heading fiscal year. Fiscal year. Fiscal year. It is also called accounting year. It is also called accounting year. Accounting year is a period of 12 months. Is a period of 12 months for which the organizations generally prepares the financial statements. An accounting year may be the calendar year. An accounting year may be the calendar year or non-calendar year. An accounting year may be the calendar year or non-calendar year. Means what? See here, you take any country. Generally, the business enterprise in that country, every business enterprise in that country has to prepare the financial statements for a period of 12 months. It is the general, right? This period of 12 months is called accounting year in the accounting terminology. But in SAP, that is called fiscal year. So here, first I will explain the concept of the fiscal year from the Indian perspective. After that, I will explain the concept of fiscal year from US perspective. Right? Now, see here, fiscal year variant. Fiscal year is an accounting year. So accounting year may be the calendar year. Means January to December. Calendar year means January to December. Or it may be non-calendar year. Non-calendar year means April to March. Or it may be July to June. Or it may be October to September. See, January to December calendar year is used in US company, in US country, right? Then April to March. April to March means starting from the April of current calendar year and ending with the March of next calendar year. Then July to June means starting from the July of current calendar year and ending with the June of next calendar year. Similarly, October to September means starting from the October of current calendar year and ending with the September of next calendar year. So generally, in any case, fiscal year contains 12 months. So in India, every company, and for that matter, every individual SSC also has to has to maintain the books of accounts and has to prepare the financial statements for a period starting from April to March. Why so? Because there is one act in India, Indian Income Tax Act 1961. So that Indian Income Tax Act 1961 clearly specifies that every business enterprise has to maintain the books of accounts for a period of April to March, and from that books of accounts it has to prepare the financial statements. That's why every business enterprise in India has to follow April to March. Like that, every country will have its own specific legal enactments, and that specific legal enactments will clearly specify what is the period they have to use for the purpose of preparing financial statements. So in US, the companies will use January to December. In India, the companies will use April to March, right? And Ollie, can you tell me what is the fiscal year in UK? I think it is July to June.
Um, no, sir, it's end in March.
Okay, April to March.
Where I work, April to March, yeah.
Okay.
Where I work, they use April to March.
Okay, that's fine. Okay, anyhow, see, in India, the present fiscal year, in India and UK, right? The present fiscal year is 2015 and 2016. So this is called the year 2015 and 2016, right? But in the SAP terminology, the year 2015 and 2016 is called the fiscal year 2015. Similarly, the year 2016 and 2017 is called the fiscal year 2016. Means in SAP, the fiscal year is represented with the first part of the accounting year. So when you say fiscal year 2015 in SAP, in the case of Indian companies and UK companies, what you have to understand is it contains the periods starting from April 2015 and ending with March 2016. Similarly, when you say fiscal year 2016, we have to understand that it contains the periods starting from April 2016 and ending with March 2017. That's how we have to interpret the fiscal year in the case of Indian companies and UK companies. Suppose, for example, we are following July to June, right? In that case, when you say fiscal year 2015, we have to understand that it contains the periods starting from July 2015 and ending with June 2016. Similarly, when you say fiscal year 2016, we have to understand that it contains the period starting from July 2016 ending with June 2016. That's how we have to represent the fiscal year in case of SAP. Now, the fiscal year 2015, the present fiscal year in India and UK is 2015, right? So, the fiscal year 2015 contains the periods from April 2015 and ending with March 2016. So, in the normal terminology, we call them as months, but in SAP, each month is called posting period. April 2015 is called the first posting period of fiscal year 2015. May 2015 is called second posting period of fiscal year 2015. June 2015 is called third posting period of fiscal year 2015. Similarly, December 2015 is called ninth posting period of fiscal year 2015. Once December 2015 is over, we enter into June 2016. Sorry, January 2016. Then January 2016 is called 10th period. February 2016 is called 11th period, and March 2016 is called 12th period. So for Indian companies and UK companies, this is the 12th period. March 2016 is the 12th period of fiscal year 2015. So within next 18 days, the current fiscal year is going to be over and 2016 fiscal year will start. Okay, that's how the months are represented in SAP. Then once March 2016 is over, for Indian companies and UK companies, we have to prepare the financial statements from the books of accounts of 2015 and 2016. But before preparing the financial statements, the accounts department has to carry on number of adjustments. What are those adjustments? For example, you are using 100 raw materials in your manufacturing process and you are producing and selling 10 finished products and you are using 25 types of stores and spares. We are using 10 types of packing materials. So for the purpose of preparing financial statements, we have to evaluate the closing stocks of 100 types of raw materials, 25 finished goods. Then for different finished goods, we have the work in progress. So we have to evaluate the work in progress. We have to evaluate the stores and spares. We have to evaluate the packing material. Why these closing stocks? Yes. See, I am back. There was a little bit disturbance in my internet, right? See, before preparing the financial statements, right, we have to evaluate the closing stocks of all these materials. And you are having 5,000 customers. I hope everybody is able to hear me. Okay. So we are having 5,000 customers and some of the customers may be expected to become bankrupt. In that case, it's not possible for us to receive the debts from them. In that case, their amounts are to be written up to bad and doubtful debts. For that reason, we have to analyze all the 5,000 customers. And unless you make all these adjustments, if you prepare the financial statements, they may not show the correct picture of the profit. That's why we have to carry on all these adjustments. But these adjustments cannot be completed in 1 day or 2 days. They need some time, right? That's why in SAP, right, after the close of the fiscal year, we have the facility to carry on adjustments up to 4 months. See, we have the facility to post the adjustments up to 4 months immediately after the close of the fiscal year. In the case of Indian companies, once March 2016 is over, April 2016, May 2016, June 2016, and July 2016. So up to these 4 months, we can post adjustments for the purpose of preparing financial statements. Here, the periods 1 to 12, they are called normal posting periods, means April to March. April 2015 to March 2016, they are called normal periods. And April 2016 is called 13th period. May 2016 is called 14th period. June 2016 is called 15th period. And July 2016 is called 16th period. So the periods 13, 14, 15, 16, they are called special posting periods. So into the normal posting periods, always we post the daily business transactions. And into the special periods, we post the adjustments to the previous books of accounts. And the normal posting periods are mandatory. Remember, the normal posting periods are mandatory, but the special periods are optional. You can have 0 special period, or only 1 special period, or 2 special periods, or 3 or 4. So always the special periods are optional. Even though the special periods are optional, every client company in the real time prefers to have all the 4 special periods, because always it's better to have as much long term as possible to make the adjustments, right? That is the reason why every client company prefers to have 4 special periods in the real time. And here you may be getting some doubts, right? Just keep them in your mind. At the end of the topic, all the doubts will be clarified automatically. Now, here I want to, as I told you, special normal posting periods are mandatory. Special periods are optional. Now, I don't want to have any special periods. In that case, I have to be ready with the final financial statements by 31st March 2016, which is just impossible, right? Because you don't have the time to post adjustments. Adjustments are also to be posted on 31st March only. Now, if you want to have only one special period, you can post the adjustments up to 30th April 2016. And if you want to have 2 special periods, you can post the adjustments up to 31st May 2016. I'm talking about fiscal year 2015. And if you want to have only 3 special periods, you can post the adjustments up to 30th June 2016. If you want to have 4 special periods up to July 2016 only, you can post the adjustments. So the number of special periods you want to have determine the period for which you can post adjustments, right? See, for the purpose of general ledger accounting, right, the maximum number of normal posting periods are 12 and the maximum number of special posting periods are 4. So the total maximum number of posting periods are 16 for the purpose of general ledger accounting. Okay, now let us try to understand the concept of fiscal year from the US perspective, right? Let me change this year. We are in 2016. Yeah, after doing the year end. One second, let me change the year in the slide. Okay, so in US, the current fiscal year means current calendar year is 2016. So calendar year means obviously it contains the periods from January to December. So January 2016 is called first posting period. February 2016 is called second posting period, and March 2016 is called third posting period, and December 2016 is called 12th posting period. So according to US fiscal year, March 2016 is third period now. But India fiscal year 2015 period is 12. Similarly in US, in UK also. Okay. Now in the case of US companies, once 31st December 2016 is over, again we have to carry on adjustments, right? Then January 2017 will be the first special period. February 2017 will be the second special period. March 2017 will be the third special, and April 2017 is the fourth special periods. Remember, there cannot be any gap between the last normal period and the first special period. So the special periods always follow immediately the last posting period of the fiscal year. Okay. Now, in the case of US companies, right, January, February, March, April will be the special periods. Okay. Now, coming to Indian example, 31st March 2016 is over. Let us assume, right? 31st March 2016 is over, and after 31st March 2016, normal fiscal year starts, right? April 2016 to March 2016, sorry. After 31st March 2016, new fiscal year will start April 2016 to March 2017, right? Okay, and also we have chosen to have 4 special periods. Okay, then let us assume today is 12th June 2016. Let us assume today is 12th June 2016. So on this day, I am posting one business transaction. Remember, normal fiscal year is what now? 2016 to 2017, right? And we have chosen to have 4 special periods. Today is 12th June 2016. Today I am posting one business transaction. So this business transaction may be relating to current year, 2016 and 2017, or it may be the business transaction relating to previous year as an adjustment. I hope everybody is able to get my point. In that case, how the system understands that whether the business transaction we are posting is relating to normal year, I mean relating to current year 2016 and 2017, or it is related to previous year as an adjustment. How the system understands? One second. Okay, Shivakumar, no problem, right? You can leave the class. Yeah. So in this case, how the system differentiates between the business transaction relating to current year or previous year? Remember, at the time of posting every business transaction, the user has to enter the period number. The user has to enter the period number. So at the time of posting the business transaction, if the user enters the period number 3, system understands that that business transaction is relating to current year 2016-2017. But if the user enters the period number 15, then the system understands that okay, this is the business transaction relating to previous year as on adjustment. So with the help of the period number, the system will be able to differentiate between business transaction related to current year and the business transaction relating to previous year as an adjustment. And one more thing is, all the adjustments posted. Yeah. Yes, Giri. Giri is asking me to repeat again. At the time of posting every business transaction, the user has to enter the period number, right? In this case, if the user, means employee, enters the period number 3, then system understands that this is the business transaction relating to current fiscal year 2016-2017. Why? April 2016 is called first posting period, May 2016 is called second posting period, and June 2016 is called third posting period, right? Suppose if the user enters the period number 15, system understands that that business transaction is related to previous year as an adjustment. Clear, Giri? Okay. Now, when you post any adjustments in any of the special periods, those adjustments are posted as on the last day of the last posting period of the fiscal year. In our example, when you post any adjustments in any of the special periods, that adjustment will be posted on 31st March 2016 in the case of Indian companies. But in the case of US companies, 31st December, right? Generally, these adjustments will be posted on the last day of the every fiscal year. Otherwise, you can give any date in the previous year on which the adjustments are to be posted. So this is the concept of the fiscal year relating to Indian companies and US companies. Now, the normal posting periods are used to post the daily business transactions. The special posting periods are used to carry on the adjustments to previous books of accounts. The maximum number of normal posting periods is equal to 12 and the maximum number of special posting periods is 4. This is for the purpose of general ledger accounting. Why I am insisting on purpose of general ledger accounting? Because there are some other concepts like special purpose ledger, etc., etc. For the purpose of a special purpose ledger, each day can be a period, right? That is a different issue that we will discuss later. For the purpose of general ledger accounting, the maximum number of normal posting periods are 12 and the maximum number of special periods are 4. So in any case, we can have maximum 16 special periods, 16 total periods. So in the fiscal year variant, we define the number of normal posting periods and the number of special posting periods. That's why that is called variant. Variant is an object for which some values are defined. So fiscal year variant is an object for which some values are defined. What are those values? Normal periods are 12 and special periods are 4. That's why that is called fiscal year variant. See here, whenever anybody is posting the question, right, you post it in entire audience, right, so that they can see your question, and when I give the answer, others also can understand, right? This is the question posted by Giri, right? Why we have to do special posting, and please give some examples, right? See here, for example, our fiscal year 31st March 2016 is over, right? Now, your total sundry debtors, we are expecting the 10 crores. You have to receive from all the customers 10 crores. But unexpectedly, in the month of June, you came to know that some of your customers are going to bankrupt due to the very bad economic conditions. So for some of the customers, you have to receive 1 crore. So when they become bankrupt, you won't receive it. That's why it has to be provided for as bad debts. See, generally what happens is, once 31st March 2016 is over, I'm talking about Indian companies. Once 31st March 2016 is over, the accounts department will prepare the financial statements from the books of accounts as it is. They are called provisional financial statements. And these financial statements, along with the books of accounts, along with the vouchers, will be taken to auditor office. So the audit clerks will watch your books of accounts. Watching means they verify the correctness of the books of accounts. They verify that every business transaction is supported by the document. That is called watching. So the audit clerks will watch your transactions, your books of accounts. Then the auditors may suggest some adjustments. Like what? You may have to, let us talk about the income tax point of view. They are suggesting you to increase the profits to pay some more income tax to the government. For that, you have to do some adjustments. So like that, the auditors may suggest you some adjustments in the month of April at the end of the audit. And all these adjustments will be done in May 2016. After making the adjustments in the month of May, again we prepare the financial statements that are submitted to the board of directors in the month of June. And in the month of June, the board of directors has to approve the statements, financial statements. But when they are presented to the board of directors, and the board of directors may suggest some more adjustments, and these adjustments are done in the June. These adjustments are done in the June. Then in the next month, July, again, after making all these adjustments, you prepare your financial statements. That's how it happens in the real time. Okay, Giri? Okay. So here, fiscal year variant means the object for which we define some values. What are those values? Number of normal periods 12 and number of special periods are 4. That's why that is called fiscal year variant. So here it is mandatory that every company code should be assigned with one fiscal year variant. For that purpose, we can use the system defined fiscal year variants, or we can define our own fiscal year variants. These are the sum of the system defined fiscal year variants. V3, April to March, 12 normal and 4 special. K3, calendar year, means January to December, 12 normal and 3 special. Similarly, K4, calendar year, 12 normal and 4 special. Here, V3, K3, K4, they don't have any meaning. They are the variants. It is the name of the object, nothing else. In the system already, all the fiscal year variants, according to the requirements of almost all the countries in the world, have been defined. But if necessary, we can also define our own fiscal year variant. How to define our own fiscal year variant? Also, I will tell you after some classes. And one more thing here is, normally accounting year contains 12 months, but sometimes, right, the accounting year may be less than 12 months or it may be more than 12 months. This type of fiscal years are called year dependent fiscal years. What is the year dependent fiscal year? We will discuss again. And also there is another concept, shortened fiscal year. So what is the shortened fiscal year and what is the year dependent fiscal year? These things little bit advanced. So after some classes we will discuss regarding these concepts. So this is the concept of the fiscal year variant. Now see the material. Define fiscal year variant. Transaction code OB29 slash and OB29. I think we have to log in because in between my internet connection was disturbed, no? So we might have lost the connection to the server. Again, I am logging in. OB29. One second. See the material, what I have written there. No action required. Just to identify which fiscal year variant you want to use for your company code. See here, our company code is in US. So we have to use calendar year, right? And in addition to calendar year, I want to use 4 special periods, right? For that, we have one fiscal year K4. Look at the screen, K4, calendar year. Number of posting periods 12, number of special periods are 4. Suppose you are doing the practice with Indian company code, right? We have to use April to March and 4 special periods. In that case, see, V3 is there. V3, April to March for 4 special. Number of periods 12, number of special periods are 4. Suppose if you want to use July to June, V6 is there. If you want to use October to September, V9 is there. Like that, all the fiscal year variant, according to the requirements of all the countries have been defined in the system. So you need not do anything in this particular step, right? How to define our own fiscal year variant, right? We will discuss later. Then see the next step. Step number 2.2. Assign company code to fiscal year variant. Assign company code to fiscal year variant. Transaction code OB37. Click on position. Click on position. Company code is equal to 3699. Company code is equal to 3699. Click on enter. See, 3699 company code has been taken in the first line. Fiscal year variant is K4. Fiscal year variant is K4. Click on save. This is called warning message. Look at the warning message on the status bar. No postings are possible without fiscal year variant. I told you, no, it is mandatory that every company code should be assigned with the fiscal year variant, right? See, if you see the cursor is against this company code 3888. So for this company code, system is saying that for this company code, fiscal year variant was not assigned. It's not our company code. This company code might have been created by another student in the class, and he has not yet assigned the fiscal year variant for his company code. That's why it is giving the warning message. So if you get any warning message, just ignore the warning message. And I told you to ignore the warning message, click on enter button. Again, it is giving the warning message and cursor is against this company code. Ignore. Now it is against this 4321. So till you get this request box, you have to go on clicking on enter. So when you get this request box, just click on it. So we have data was saved. We have assigned the fiscal year variant to our company code 3699. Okay. Then see the next step, chart of accounts. So first let us try to understand what is the concept of chart of accounts, right? But before that, let's have a break of 10 minutes. So I will be back exactly in 10 minutes. Yes, I am back. Ali, are you there? Kalyan, are you there? Okay.
Yes, sir, I am here.
Okay, Ali. Okay, Kalyan. Kirti, are you there? Sailaja? Okay. Srinivas. Tejasvi?
Yes, sir, I'm there.
Okay. Giri?
Yes, sir, I'm here.
Okay. Venkatesh? Okay. Now, so first let us try to understand what is the concept of chart of accounts. One second. Kirti says that he is not able to hear me. See, chart of accounts. It is the list of general ledger accounts used by the organization. Here, in the real time, every business enterprise will use hundreds and thousands of ledger accounts, like rent account, wages account, salaries account, traveling expense account, postage account, etc., etc. All the GL accounts together is called chart of accounts in SAP, nothing else. It is compulsory to define the chart of accounts before creating any GL account master record. So without chart of accounts, it's not possible to create the ledger accounts in the general ledger accounting. And for every general ledger account, it contains the information such as the name of the account, general ledger account number, and the account group, etc. Here, not only in SAP, in most of the accounting packages also, right? Every GL account is identified with a number, right? So, what is the number of each GL account? What is the name of each GL account? What is the group of every GL account? What is the maintenance language? So, all this information is contained in the chart of accounts for every GL account. So, that is the meaning of the chart of accounts. It is compulsory that we should define one chart of accounts, and that should be assigned to the company code. Without assigning the chart of accounts to the company code, we cannot create the general ledger account master record. See, master record is nothing but account. GL master record means GL account. Vendor master record means vendor account. Customer master record means customer account, nothing else. See, in SAP, there are three types of chart of accounts. Number one, operating chart of accounts or operational chart of accounts. It is the list of all the general ledger accounts to which the daily business transactions are posted. And it is compulsory for every company code that it should be assigned with one operational chart of accounts. Here, operational chart of accounts or chart of accounts, both are same. When you say operational chart of accounts, it implies only chart of accounts. Or when you say chart of accounts, it implies only operational chart of accounts. So during the daily management of the business, right, we incur some expenses and we receive some revenues, and also we affect some balance sheet items. So all these business transactions are posted to different ledger accounts. All these ledger accounts together is called operational chart of accounts. And the financial statements, according to the legal requirements of the country in which we are doing business, are prepared always from operational chart of accounts. Suppose, for example, you are doing business in India. So we have to prepare the financial statements according to Indian Companies Act 1956. For that, the financial statements are prepared from the operational chart of accounts. Means here in the operational chart of accounts, you maintain all the GL accounts which are necessary to prepare your financial statements according to the legal requirements of the country in which you are doing business. Suppose you are doing business in UK and you are doing business in US. Then when you are doing business in US, you have to prepare the financial statements according to the requirements of US Companies Act. For that reason, we need to maintain some GL accounts. All these GL accounts together is called operational chart of accounts. That is the meaning of operational chart of accounts. Then we have group chart of accounts. It contains the list of general ledger accounts used by the corporate group to prepare consolidated financial statements, and its definition is optional. Here you know company, right? Company represents the group. So at the company level, we can prepare the consolidated financial statements, and the definition of company is optional, right? So similarly, if you want to prepare the consolidated financial statements for the company, we have to define group chart of accounts. And the definition of group chart of accounts is also optional. Why? Creation of company is optional, or logically, the creation of group chart of accounts is also optional. But if the group management wants to see the consolidated financial statements, then only we have to define company. After that, we have to define group chart of accounts. Then, number 3, country-specific chart of accounts. It contains the general ledger accounts required to meet the country-specific legal requirements. See, again I'm repeating. It contains the general ledger accounts required to meet the country-specific legal requirements. Means what? See, for example, our company code is 3699, right? So our company code is in US. Now, you have to prepare the financial statements according to the requirements of US Companies Act. In order to meet that requirements, we are maintaining some set of GL accounts. That set of GL accounts is the operational chart of accounts for US Company Code. So for that operational chart of accounts, we have to give one name. Let us say that name is also 3699. This is called operational chart of accounts for US Company Code. I hope till now it is clear. Then this US Company Code is also carrying on business in India. I told you in the previous class, whenever the boundaries of any particular country are crossed, then we have to maintain a company code, right? Now, so if you want to carry on business in India again, you have to register yourself under the Indian Companies Act. As a result, it becomes a separate legal entity. For that separate legal entity, let us give one name, 3799, right? This is in India, right? Indian Company Code. Okay, now, because this Indian Company Code is basically registered under the Indian Companies Act, first it has to prepare the financial statements according to the legal requirements of the Indian Companies Act 1956. For that purpose, it needs to maintain some set of GL accounts. All these set of GL accounts is called operational chart of accounts. For that operational chart of accounts, you have to give one name. Let us say that is also 3799. This is operational chart of accounts. COM means chart of accounts, right? Now, I hope till now it is clear to everybody. So here, majority of the share capital of Indian Company Code is contributed by US Company Code. So this US Company Code is called holding company and Indian Company Code is called subsidiary company. Now, in US Companies Act, there is one requirement or there is one provision, like if any US company is carrying on business outside US, it has to report to the US government on the operations of its foreign entity. Again, I am repeating. In the US Companies Act, there is one provision that if any US company code is carrying on business outside US, that US entity or the US company code has to report to the US government on the operations of its foreign entity also. Here, what is our foreign entity? Indian company code, right? You think as you are the US company code. Our foreign entity is Indian company code 3799. So we have to report to our US government on the operations of our foreign entity, Indian company code. Now you think as Indian company code. The Indian company code has to prepare two sets of financial statements. One set of financial statements according to Indian Companies Act, for which we are maintaining the chart of accounts 3799. This is called operational chart of accounts. In order to meet the requirements of the US Companies Act, what is the chart of accounts you are maintaining? 3699, right? Now, this Indian company code also has to prepare the financial statements based on the 3699 chart of accounts. So this 3699 chart of accounts is called country specific chart of accounts. Again, we are carrying on business in UK. That is, let us say 3899, this is UK company code. In order to meet the UK Companies Act requirement, we are maintaining one operational chart of accounts, 3899. This is the operational chart of accounts. Again, majority of the share capital of this UK company code is also contributed by US company code. Then again, the UK company code has to prepare the financial statements according to legal requirements of US Companies Act, for which you are using 3699 chart of accounts. So this 36 chart of accounts is called country specific chart of accounts for UK company code. Simply saying, the chart of accounts of the parent company code will be the country specific chart of accounts for the subsidiary company code. That is simple as that. Now here the question is, one more doubt you may get. In India, see here, again I am repeating, what is the meaning of the country specific chart of accounts? Our company code is in US. In order to meet the US Companies Act requirements, we are maintaining one chart of accounts 3699, operational chart of accounts. Then we are also carrying on business in UK. So when the boundaries of any particular country are crossed, I told you that you have to maintain one separate company code, right? Let us say UK company code is 3899. Majority of the share capital of UK company code is contributed by 3699 US company code. In this case, 3699 US company code is called holding company and this is called subsidiary company. Now, in the US Companies Act, there is one requirement that if any US company is carrying on business outside USA, it has to report to the US government on the operations of its foreign entity. So, company code US, what is its foreign entity? UK company code. So, this US company code has to prepare the financial statements on the operations of its UK entity and they are to be submitted to US government. Now, you think as a UK company code. You have to prepare two sets of financial statements. One set of financial statements is according to the UK Companies Act requirement, for which you are using 3899 chart of accounts, operational chart of accounts. Then we have to prepare another set of financial statements according to 3699 chart of accounts, because it is the operational chart of accounts maintained by US company code to meet the US Companies Act requirements, right? That's why this UK company code also has to prepare the financial statements based on 3699 chart of accounts. Then this 3699 chart of accounts is called country specific chart of accounts. Clear, Sailaja? Okay. If anybody wants, they can write it down. Okay, before writing down, listen to me again. See, in India, right, fiscal year is April to March, but in US, January to December, right? So, how this difference of fiscal year is taken care? For this, we use one concept. In the current version, there is one concept, new general ledger accounting, right? So in the new general ledger accounting, there is another concept which is called parallel ledgers, right? Using the parallel ledgers, you can take care of the differences in the fiscal years, right? That also will show you later on. Yeah, Venkatesh, you can give, right? I will send you the recording, no? No problem. Now, if anybody wants, they can write it down. I hope writing down is over for everybody. If anybody is still writing, let me know. Yes, of course. We can use it for internal reporting also. If anybody is still writing, let me know, I will wait. Yes. See, a chart of accounts can be used by one or more company codes. Here, in the simple words, the chart of accounts will determine the structure of the GL accounts and the nature of the GL accounts. So here, a chart of accounts can be used by one or more company codes, means several company codes can use the same chart of accounts. So when several company codes can use the same chart of accounts means what? The GL account number, GL account name, and the account group and the maintenance language, etc., will be same in all the company codes. See, when several company codes are using the same chart of accounts, the GL account number, GL account name, and account groups, etc., will be same in all the company codes. Why so? This is the information that is contained in the chart of accounts. But in order to enable several company codes to use the same chart of accounts, all the company codes should be in the same nature of business. Suppose, for example, you have two company codes. A company code and B company code. So, A company code and B company code both are in the same nature of business. In that case, nature of GL accounts can be same, right? But so in that case, both the company codes can use the same chart of accounts. Suppose, for example, A company code is in the chemicals manufacturing and B company code is in the textiles manufacturing. In that case, nature of GL accounts can be same? No. The nature of GL accounts will be definitely different. In that case, both the company codes have to have their separate and own chart of accounts. So first condition is all the company codes should be in the same nature of business and all the company codes should be lying in the same country. Why? Because we maintain the GL accounts to meet the country legal requirements, and obviously generally the country legal requirements of two countries are entirely different. In that case, how can you use the same GL accounts? That is the reason why. In order to enable several company codes to use the same chart of accounts, two conditions must be satisfied. All the company codes should be in the same country and all the company codes should be in the same nature of business. I hope it is clear to everybody. Then, a company code can have two chart of accounts. Means a company code can be assigned with two chart of accounts. Number one, operational chart of accounts. Number two, country specific chart of accounts. More than two, it's not possible to assign to a company code. So all this explanation again, I have documented in your notes. Chart of accounts. So before doing the practice, first to read the notes, then start the practice. Okay. Now let us see how to maintain the chart of accounts. That is the step number 3.1. Define chart of accounts. SPRO. If you keep the server idle for 5 minutes, right, it will be automatically logged off. SPRO. You can use slash and SPRO. Financial accounting, general ledger accounting, GL accounts. Otherwise, you can use the transaction code. Master data, preparations, edit chart of accounts list. Click on new entries. Chart of accounts is equal to give some name. I am using our company code name only, 3699, so that we can remember easily. What is our chart of accounts? 3699. What is our business area? 3699. That's how we can easily remember. That's why everywhere I am using our company code name only. Otherwise, if you want, you can use different names. Chart of accounts is equal to 3699. Description is equal to chart of accounts for 3699. Chart of accounts for 3699. Maintenance language is equal to select English. Maintenance language is equal to select English. Here, if you press on this is called drop down menu, right? So whenever you see the drop down menu in any field, you can select from the drop down menu only. You cannot type manually, right? So maintenance language is English. So the GL accounts are managed in English language. Length of GL account number 06. Length of GL account number is 06. Within brackets. Within brackets. The maximum length of GL account number is 10 digits. The maximum length of GL account number is 10 digits. See, here I told you, every GL account is identical with a number. So in that case, how many number of digits you want to have in the GL account number? Here I have defined that I want to have 6 digits. Means we can create up to 9,99,999 GL accounts, because the biggest number containing 6 digits is this number. Suppose If you enter 01 there, you can create only 9 accounts because the biggest number containing single digit is 9. Suppose if you enter 02 there, you can create 99 GL accounts because the biggest number containing 2 digits is 99. Suppose if you enter 03, you can create only 999, which is not sufficient for our purpose. That's why I have given 6 digits. In the real time, generally we use either 5 digits or 6 digits or 7 digits, right? Below 6, generally we don't use, and above 5, 6, 7. Above 7, we don't use, right? Generally, we use either 5 or 6 or 7. But in most of the cases, according to my experience till now, right, we are using 6 digits. 6 digits is the most common, right? I hope it is clear to everybody. Click on save. So whenever you get this request box, click on enter. See the next step. Assign company code to chart of accounts. Path is same as above. So whenever you see path is same as above, this is called back arrow, right? Just go on clicking on back arrow till you go to IMG screen. So you reach the IMG screen. Immediately you have assign company code to chart of accounts. Click on position. Company code is equal to 3699. I hope everybody is writing in the material. Company code is equal to 3699. Click on enter. Chart of accounts is equal to 3699. Chart of accounts is equal to 3699. Here, chart of accounts means operational chart of accounts. Look at the screen. CHRT ACCTS means chart of accounts. CTY CHEACT means country specific chart of accounts. Suppose if you have another chart of accounts, country specific chart of accounts, that has to be assigned here, nothing else. See, you have only 2 fields. For a company code, you have only 2 fields, chart of accounts and country specific chart of accounts. So a company code can be assigned with only 2 chart of accounts. One is operational chart of accounts, other is country specific chart of accounts. Suppose here 3888 is your parent company code, right? It is in India. Okay, so if you have to use this Indian chart of accounts, you have to assign 3888 chart of accounts here, nothing else. Click on save. Right? 1 second, please. Yes. See the next topic. Define account groups. So first I will explain what is the concept of account groups. One second. See, account groups. All the general ledger accounts of the organization are classified into different groups for the easy and convenient management of GL accounts. These are called account groups. The GL account master records are created under the respective GL account groups. GL account master records means individual ledger accounts are created under the respective account group. And also, every GL account is identified with a number, right? So that's why we assign the number range for every GL account group. Number range means from number and to number. At the time of creating the GL account master records, we select the number from the number range of the accounts group under which the GL account master record is created and give it to the GL account. This you cannot visualize now, right? This you can clearly understand at the beginning of the this you can understand at the beginning of the general ledger accounting, right? There I will explain again. Then there is no limit to the maximum number of GL account groups. You can create any number of account groups, but there should be minimum 2 GL account groups. That is balance sheet accounts group and profit and loss accounts group. Means what? See, balance sheet accounts group and profit and loss accounts group. Balance sheet accounts group means all the GL accounts which are displayed in your balance sheet will be created as one account group. This is the similarity. Based on the similarities among the GL accounts, all the GL accounts are grouped together. These are called account groups, nothing else. Then profit and loss accounts group means all the GL accounts which are displayed in the profit and loss account can be created as another account group. So minimum there should be 2 account groups. Number 1, balance sheet accounts group and profit and loss accounts group. But maximum we can create any number of account groups based on the requirement. Suppose for example, if you take balance sheet, you have the 2 sides, asset side and liability side. So each side of the balance sheet can be taken as one account group. Means liabilities can be created as one account group. Means all the GL accounts which are displayed on the liability side of the balance sheet will be created as one account group, and all the GL accounts which are displayed on the asset side of the balance sheet can be created as another account group, assets. Then again you have the P&L account, right? So in P&L account you have again 2 sides, expenditure and incomes. So expenditure can be created as one account group. Means all the GL accounts related to your expenses are created under the expenditure account group. Then incomes can be taken as one account group. All the GL accounts relating to your revenues are created under the incomes account group. That's what I told you. The individual ledger accounts are created under the respective account groups. So here you can create only 2 account groups. In our example, you can create only 2 account groups, balance sheet accounts group and profit and loss accounts group, or you can create 4 account groups like liabilities, assets, expenditure and incomes. Otherwise, if you consider the liability side, on the liability side we have the different headings: share capital, reserves and surpluses, accumulated depreciation. In that case, each heading of the liability side can be created as one account group. Here I am using the terminology and the wording can be, means it's not the rule, it's only a matter of convenience. So if you create the share capital as one account group, then all the GL accounts relating to share capital are created under the share capital account group, like equity share capital, preference share capital, redeemable preference share capital, irredeemable preference share capital, subscribed share capital, issued share capital, paid up share capital. So all the GL accounts relating to your share capital are created under the share capital account group. Then reserves and surpluses can be another account group. In that case, general reserve, dividend equalization reserve, sinking fund reserve, investment reserve, capital reserve. So all the GL accounts relating to reserves are created under the reserves and surpluses account group. Then accumulated depreciation can be created as another account group. Means accumulated depreciation on plant and machinery, accumulated depreciation on buildings, accumulated depreciation on vehicles. Like that, the accumulated depreciation accounts on all the fixed assets are created under this account group. Then secured loans, term loans, debentures, etc., etc. All the secured loans related accounts are created under the secured loans. Then unsecured loans. Loans from the relatives of the directors, loans from the directors, loans from the friends of the directors, means all the loans which are not secured by any assets of the company are created under the secured loans. Then current liabilities and provisions, sundry creditors, outstanding expenses, incomes received in advance. So like that, all the GL accounts relating to current liabilities and provisions are created under this account group. Like that, you can have any number of account groups again here. Then coming to asset side, we have the fixed assets. So fixed assets heading can be created as one account group. Means when you create the fixed assets as one account group, land account, buildings account, plant and machinery account, vehicles account, furniture account, all the fixed assets accounts are created under the fixed assets account group. Then current assets, loans and advances. In that case, sundry debtors, inventory of raw material, inventory of packing material, inventory of finished goods, work in progress account, sundry debtors, then incomes receivable, prepaid expenses. So like that, all the current assets related to GL accounts are created under the current assets, loans, advances account group. Like that, individual GL accounts are created under the respective account groups. Coming to expenditure side, raw material consumption, personal cost means staff expenses, salaries, contribution to PF, contribution to ESI, staff welfare expenses, etc., are created under the personal cost. Manufacturing cost, administration cost, interest, depreciation. Then coming to income side, sales, other incomes, increase or decrease of stocks. Like that, we can go on creating any number of account groups. So here there is no concept of main group and subgroup. Remember, there is no concept of main group and subgroup. Just for your understanding purpose, I have started from the highest level and taken you down to the lowest level. Here you can create only these two as account groups, or these four as the account groups, or all the headings within this circle can be created as account groups. There is no concept of main group and subgroup. Okay, fine. We can create only two account groups. In our example, I am talking about. We can create only two account groups or four, or these as account groups, right? So, what is the best strategy to decide the account groups? See, always we have the best strategy. I am telling you, it's not the rule, right? Generally, the strategy we follow is we have to look into the balance sheet and the profit loss account display requirements. Means in your balance sheet and the profit and loss account, under what headings the GL accounts are to be classified, under what headings the GL accounts are to be displayed. If you create these headings as account groups, at the time of preparing the financial statements, the work of the consultant will become very easy. That is the best strategy we follow. But technically speaking, we can create either two in this case or four or these things as account groups. Clear? Then there is no limit to the maximum number of GL account groups, but there should be minimum two GL account groups, that is balance sheet accounts group and profit loss account accounts group. Then we can add the GL account groups during the fiscal year if the need arises. During any fiscal year, we can add the account groups. We can delete the GL account groups provided no accounts are created in that group. Means if you have created some GL accounts under the account group, it's not possible to delete the account group. Okay. Then the following are the functions of GL account groups. At this point of time, you cannot visualize what is the exact functions of these two GL account groups, right? But at the beginning of the general ledger accounting and at the end of the general ledger accounting, we can clearly understand what is the functions of these GL account groups. See, to control the number to be allotted to the general ledger master record created under the respective group. This is the first function. And second function is to control the display of fields to be maintained in the general ledger master records created under the respective group. That is, whether every field is required or optional or displayed or suppressed. This function I will explain you at the end of the general ledger. So this is the concept of the account groups. Now let us see how to create the account groups. See the material. Path is same as above or transaction code OBD4 /n OBD4. Click on new entries. For every account group, you have to give a name. The name can be anything. Again, it is 4 characters and alphanumeric. So chart of accounts is equal to 3699. And look at the material once. Here, in every row, right, you please write 3699, chart of accounts. So these are the account groups what I am going to create in our company code. I mean, in our chart of accounts. So for every row, you just write in the material 3699. Okay. I hope everybody has written the chart of accounts in every row. Now, chart of accounts is equal to 3699. The account group is SCPL, means share capital. Just like that I am giving SCPL, share capital. From account is 100,000 or 1 lakh to 1 lakh 99. So why from account is 1 lakh? I told you no, every GL account is identified with a number, right? For that purpose, we assign the number range for every account group. Number range means from number and to number. So we use the number ranges very frequently in SAP, right? But here for the share capital, I have given from account to 1 lakh to account to 1 lakh 99. Why so? In the previous step, when you are creating the chart of accounts, you have specified that length of GL account number 6 digits. Means you can use up to 6 digits. Means you can start with 1. But for the uniformity purpose, I have started with 1 lakh because the smallest number containing 6 digits is 1 lakh. That is the reason why from account 1 lakh. Then to account I have given 1 lakh 99 because there is a need to create 100 GL accounts under the shared capital account group. For every GL account, there should be a number. So 100 GL accounts means 100 numbers should be there. That's why I have given two number 1 lakh 99. Suppose if there is a need to create 500 GL accounts under the shared capital account group, you have to maintain the number range accordingly. 1 lakh to 1 lakh 499. So just like that in our training class, I am maintaining a range of 100 for every account group. But in the real time, how do we know how many number of GL accounts you have to create under the shared capital account group? See, every client company will maintain some system of accounting, right? They may be maintaining the books of accounts manually. They may be using another accounting package, or they may be using another ERP. But business means there is one accounting system. So in the present accounting system, we have to look into how many number of GL accounts they are maintaining relating to share capital, and for that existing number we add some buffer. And of course, you need not go and count, right? The accounts department will tell you how many number of GL accounts they are maintaining. You have to ask them. They will tell you how many number of GL accounts they are maintaining relating to share capital, and for that existing number, we add some buffer, keeping in mind the future expansion requirements. That's how we decide the number in the real time. I hope it is clear to everybody. Then chart of accounts is 3699. Account group RSPL. Name is equal to reserves and surpluses. From account is 1,100,000 to 1,199,000. See, the number ranges cannot be overlapping. Means every account group has to have a separate number range. One number range cannot be used for multiple account groups. Chart of accounts 3699. Account group is ACDM. Accumulated depreciation. From number is 1,200,000 to 1,299,000. Chart of accounts is 3699. After ACDN, just I am creating the account groups according to the material only. SCLN, name is secured loans. From account is 1,300,000 to 1,399,000. Chart of accounts is 3699. UNSL, unsecured loans, 1,400,000 to 1,499,000. Chart of accounts 3699. CLPR, current liabilities and provisions. Chart of from account is 1,500,000 to 1,599,000. Then chart of accounts is 3699. FAST, fixed assets. From account is 2 lakhs to 2,99,000. Now, here for the fixed assets, I have started from 2 lakhs. Why? If you observe share capital, reserves and surpluses, accumulated depreciation, secured loans, unsecured loans, current liabilities and provisions. These are the account groups relating to the liability side of the balance sheet, right? Now, here I told you, during any fiscal year, if the need arises, we can create any number, we can add the account groups. During any fiscal year in the future, if the need arises, we can add account groups. For example, next year, there are some amendments in the Companies Act, according to which you have to add some more headings on the liability side. Means you may have to add the account group. The account group means there should be a number range. Without number range, remember you cannot create the account group. That's why in order to have the buffer number range, I have left over all the numbers between 1,600,000 to 1,99,999. That is one reason. Another reason is from the user point of view. For the convenience of the user, every GL account whose number starts with 1 is a liability account. Clear? Every GL account whose number starts with 2 is an asset account. That's why from the fixed assets, I am starting with 2 lakhs, nothing else. And it's not the rule only again. Chart of accounts is 3699. CAST, current assets, loans and advances. From account is 2,100,000 to 2,199,000. Then chart of accounts 3699. Then sale. We have moved to income side of the profit and loss account. Sales 3 lakhs. From account is 3 lakhs. Means every GL account which starts with the number 3 is a revenue account. Every GL account which starts with the number 2 is an asset account. GL account starts with 1, liability account. Clear? 3,99,000. Chart of accounts 3699. OTHR, other incomes 3,100,000 to 3,199,000. Chart of accounts 3699, INCR, increase or decrease of stocks from account 3,200,000 to 3,299,000. Chart of accounts 3699, RMCN, raw material consumption. So we have moved to expenditure side of the profit and loss account. Raw material consumption 4 lakhs. Every GL account which starts with 4 is an expense account. 4,99,000. Chart of accounts 3699, PRSN, personal cost from account is 4,100,000 to 4,199,000. Chart of accounts 3699, account group MFRG, manufacturing cost 4,200,000 to 4,299,000. Chart of accounts 3699, ADMN, administration cost. Chart of account, from account is 4,300,000 to 4,399,000. Chart of accounts 3699, INTR, interest 4,400,000 to 4,499,000. Chart of accounts 3699, DEPR, depreciation from account is 4,500,000 to 4,599,000. All these things are there in the material. That's why I have gone a little bit fast. Click on save. So this is how we have created 17 account groups. And in your practice also, for that I am coming, Shailaja. I have seen your question. I will explain you. See here, what I was explaining. Okay. So here we have created 17 account groups, right? So in your practice also, you create the same account groups with the same numbers, right? Once you get the clarity in the subject, you can do your own experiments, right? But for the time being, you create the same account groups with the same numbers. Now, how these account groups are related to our company code? We did not give the company code anywhere while creating the account groups, right? We have given only chart of accounts. In that case, how these account groups are related to your company code? See, for every account group, you have given the chart of accounts 3699, right? Then in the immediate previous step, we have assigned the chart of accounts 3699 to your company code. That's what is asked by Shailaja, right? I am coming to that point, Giri. See, you have assigned the chart of accounts to your company code. Then for every account group, you have given the chart of accounts. So all these account groups are linked to your company code. Now, suppose you have the two company codes, A company code and B company code, right? Let us assume that A company code and B company code are using the same chart of accounts 3699, right? Then what do? We assign the chart of accounts 3699 to A company code and B company code also. Then these account groups are applicable to both the company codes, no? That's why I told you, when several company codes are using the same chart of accounts, the account groups will be same in all the company codes. I hope the logic is clear to everybody. Now, I am looking into the question posted by Shailaja. See, what if the transactions posted exceed to the number range provided? Can we create the same account group and create number range? See, not transactions, Shailaja, GL accounts, right? Into the GL accounts, you post the transactions. Here, the question asked by Shailaja is like this. For example, for the share capital account group, we have given, for the time being, we have given 1 lakh to 1,99,000. 100 accounts you can create. So by middle of the June, for example, 100 accounts we have created. Still, there is a need to create some more GL accounts under the share capital account group, but there is no number range. In that case, what to do? Without number range, without number, you cannot create GL account. So in order to take care of this type of problems, what we do in the real time is, for share capital, we have given 1 lakh to 1 lakh 99, right? Then for the reserves and surpluses, you start from 1 lakh 500. So suppose 1 lakh 99 is over, then you can extend the number before 1 lakh 500 for share capital. Clear, Sailaja? And Giri, this is also answer to your question. Yes, exactly. Kirtivansa, right? If the company is having different company codes, right? And each company code is in different business, then we have to have a separate chart of accounts for every company code. Okay, Kirti? Yeah. Then the next topic is define retained earnings account. This we will see in tomorrow's class. Ali, you have any questions? Ali, you have any questions? Kalyan? Okay. Kirti? Okay. Shailaja? Srinivas?
No, sir.
Okay. Tejasvi? Tejasvi, any questions? Giri?
Sir?
Yeah, tell me, Tejasvi.
No, sir, no doubts.
Okay. Yeah, Giri, tell me.
Sir, one thing, and sir, we are giving range and we are giving names and accounts range. By mistake, we had given any wrong range, and we did not notice. And after some time, we notice. And can we edit this same thing?
Yes. We can edit. Right?
Okay, sir. Okay.
See, remember, not only here, if any field is not in gray color, right? If any field is not in gray color, we can edit that. Here, you can edit the name, you can edit the numbers also. But you cannot edit account group name once it is created.
That is a master.
It's not master data, right? Name of the account group. We cannot change the name of the account group once it is created. But we can change the description of the account group.
Okay, sir.
So any other questions with Giri? Okay, then
No,
see you tomorrow same time. Good night and good day, and I will be sending the recording to you today. And Srinivas, yesterday I have sent you one link for installing the SAP program, right? So once you install the SAP program, right, I will send you the user ID and password for doing the practice.
Okay, sir.
Okay, then good night and good day. See you tomorrow same time.
Thank you.
And every day you have to use the same link. Every class, I'm sorry, not every day, every class we have to use the same link.